Let me also take it across to Shailesh Chaturvedi, the CEO at Arvind Fashions, and talk about how their earnings was and what's the visibility going forward. Shailesh, hi, good to have you on the show. Tell us a little bit about the demand trends and how you've seen the recovery this year versus the last year.
I have a good news on recovery. This year recovery is much faster post lockdown in the unlock. So it's almost double of last year. So for example, a channel in a particular month had, let's say, 30% recovery last year. So that same channel in the same month would have a 60% recovery. So first half, we had a growth of 340%. That is in the first quarter, June ending. What is more encouraging is the July, where most markets have opened, but for Kerala and Maharashtra. In July, we saw overall recovery of 80%, and in our power brand, the recovery was 90%. Now, if I add Maharashtra, which is a big market, and the malls in Bombay and Pune are still locked down, if they were open, then we would have had near normal business. We are hopeful that as we go into the festival season, Kerala has announced the opening. I think it'll open today. We are waiting for the Maharashtra unlock to happen, and once the big cities of Bombay and Pune also get unlocked, we are gonna see. We are hoping that if there's no wave 3, we are looking forward to a near normal festival season ahead.
Okay. The operating performance for your company still continues to be under pressure, however. By when can we expect the company to return to profits as now that, normalcy, like you said, is, just around the corner and you expect things to stabilize soon?
So if you see, we have just announced a transaction on Unlimited, which was our retail chain that had lost money in the past. And then we had engineered the business in the last 2 years, and it was coming close to break even now, and we have sold that business to VMart, who is an expert in this value segment. So that would bring down, our debt level, because we get 150 crores from this transaction. Also, we had announced Gap, and in this Q2, the Gap business will also wind down. So we're expecting that this whole strategic reset that we started, and one of the big agenda was to focus on the 6 high conviction brands, including US Polo, Flying Machine, Arrow, Tommy Hilfiger, Calvin Klein, Sephora. So with those high focus, very profitable brand, by Q2, we should see, wind down and closure, exit of most of the unprofitable business. Also, the current trend, what I see of August and September, the order flow looks very, very encouraging. We believe that we will be able to break even in this quarter because the order flow and the consumption patterns are very good. If you see our last 2 quarters, second half of the last year, even in that period, our recovery was very good and EBITDA growth was quite good. This is a COVID impacted quarter, so that does impact the consumption and retail businesses. But Q2, we believe a stronger recovery, and we see breaking even at EBITDA level again in this Q2.
That's great to hear, Mr. Chaturvedi. I want to ask about your online sales, because I think a lot of businesses are trying to contend with this in different ways, and of course it's hard to predict how things will pan out once things return to normalcy. But are you seeing continued momentum in the online channels?
Yeah. I mean, I have really good news on online business, and a lot of that growth is irreversible, and I think it's about habits, etc. So in Q1, we, just to give you a statistics, we added 250 crores over last year, same quarter. Out of that delta 250 crores, 150 crore delta came from online channel. So, 150 out of 250 crore growth has been fueled by digital e-commerce channel. And the growth there has been very, very impressive. And this quarter, it was 61% of our revenue. Of course, I mean, these are COVID times. We are at a pace where digital business, the e-com business, is between 20 to 25% of our overall revenue. And it's growing very, very rapidly at good margin. So, we have good business going. Also, one reason why the digital business is growing so rapidly for us is that we build a lot of capabilities ahead of time. So, give you an example. In the quarter 1, we added another 100 stores with Omni linkages. So we have now more than 600 stores across country which are Omni enabled, and the contribution of Omni fulfillment into our store business in quarter 1 had reached a mid-teen number, which is very, very impressive and encouraging for us. Also, we added more warehouses for B2C or direct-to-consumer warehouses for faster and more efficient, cost-efficient fulfillment for the online demand. Plus, we supported online business with exclusive assortment, the merchandise which is made exclusive for online channels. So we look at the data analytics from the online channels, including our own website now.com, and then we design garments which are exclusive for online customers. So that's seen a very rapid growth. So between Omni linkages, higher mid-teen level Omni contribution to store business, more D2C warehouses, higher inventory support for marketplace model, and as well as the exclusive online assortment. We have done a lot of capability building. We have a kind of a leadership stance in this business in the industry, and we expect this growth of online business at a healthy margin will continue in our company.
Mr. Chaturvedi, a lot of apparel makers are contending with higher costs of inputs. Cotton prices are on the rise. There could be a push through of prices. Is that something that you'll have to contend with, and that will affect demand, do you think?
See, I see two aspects of this. Since last year, we have looked at the cost structure of our company very significantly. We did a lot of strategic cost reset, and we are now at a leaner cost structure to begin with. Even in this quarter, we brought down our fixed cost by 70 crores over last quarter, quarter last year, which is good through rent reduction, the marketing, and to variable expenses in the store, etc. So we are a little healthier, cost leaner structure right now. That really helps to sort of move forward, even if there are some sort of headwinds sometimes through yarn prices, etc. Also, some of these cost pushes are across the industry. They impact all the players, and everyone then take the same call of trying to pass on. And since the recovery has been very, very robust, now I don't know whether it's due to revenge travel or the fact that our brands are extremely well suited for work from home feel, because most of our portfolio of these 6 high conviction brands have a casual and a relaxed feel, and that's why they are recovering so well in the post-COVID unlock time. So we are sitting okay on cost side right now, and our brand appeal is good. So I feel that next quarter, this quarter 2 is looking good both on the top line and reversing back to EBITDA level break-even and profitability.
Right. Also wanted to understand something that you just alluded to, your tie-up with VMart Retail for strategic sale of assets of unlimited retail business. Wanted to understand a little bit more about the nature of this agreement.
So, what we did is that as a part of our strategy of focusing on 6 high conviction brands that I mentioned earlier, we had decided as a strategic move to exit unlimited business. And then we found a very good partner in VMart who is expert in this field, and they didn't have any distribution in South India, and our business unlimited was largely in South India. So it's a kind of a synergy. They needed South footprint and we needed to exit because of our strategic focus on our brands. And there are 74 stores that are getting now transferred to VMart, and the name Unlimited, the inventory in the stores, the leases of those 75 stores, there's a warehouse for Unlimited business. All those are getting transferred to VMart, and we will get 150 crores, which is at the book value of these assets. So these assets get transferred to VMart for a consideration of 150 crores at book value. So these are sort of the contours of the transaction with VMart for unlimited business.
Okay, Shailesh, good to speak with you. Thank you so much for taking the time out and chatting with us today on ET Now.
Pleasure. Have a good day.